in my opinion, non-eventful, right? Because you can sit there wait for non-farm payroll to happen, and sometimes it, you know, doesn't really do anything, right? But I mean, if you're looking at it from a a technical perspective, right? And you're doing your analysis and you're seeing that it's doing whatever setup that you're looking for to do, maybe using fields, or maybe you're using moving averages, or maybe you're using something else, right? And you're anticipating that the non-farm payroll is either going to go in your favor or against you, then you take your position accordingly based off of that. But it's like any other news event. It's like watching earnings, or it's like listening for interest rate decisions, right? You have I would hate to use this for lack of a better term, but you have a bias, or a directional bias as to which way you think it's going to go, based on whatever it is you think you analyze correctly or what have you, and you take your position based on that. I'm not sure that answers your question appropriately, but that's kind of how I treat it. Should I get anything else?
Okay, thank you.
Oh, you want anybody else? All right. Were you all paying attention to what was going down this week with the feds and the economy going down? Anybody been watching that, and want to comment on it?
Yeah, I actually watched that when Powell spoke, and he didn't really say a whole lot, but whenever he spoke, I seen how the US dollar got real strong on all the currencies across the board.
Oh, well, you say he didn't say a whole lot, but he said a lot. Right?
You know what I'm saying?
Yeah. I mean, when he's talking about that was Edward Washington over there. He was talking about the Jackson Hole Symposium. Right? Anybody know what that is? Yeah, pay attention to that. All right. Well, the Jackson Hole Symposium is an annual meeting of Fed leaders and things like that, right? And I think they meet in Jackson Hole, Wyoming, right? And it's one of the biggest Fed events of the year, right? And this week at the Jackson Hole, Fed Powell had the speech that he has every year, right? And what the Federal Reserve Bank of the United States says, most of the Feds around the world follow. So the New York Fed is the leading Federal Reserve institution. So when he got to speaking, basically what he said was that there's a lot of economic pain coming to businesses and households, and that the Fed is going to aggressively fight inflation, and the rates are going to remain high for quite some time. And that's the paraphrase what he said, but in those few little words, he took away anybody's hope who thought that the Fed was going to ease up on interest rates or ease up on their policy. So when he said that, of course, that spooked the markets, because the interest rates, the mortgage rates, the credit card rates, the loan rates are all going to be impacted by what he said. And there's a direct correlation, an inverse correlation, whether it's an inversely correlated or correlated relationship between the tech sector, which is the leading sector, the heavyweight sector of the New York U.S. exchanges, and interest rates. They tend to move in opposite directions. So as interest rates increase, the tech sector falters. right? Because it costs them more to do whatever, right? Particularly, so there's a direct inverse relationship between rates and the market, right? And it's particularly the tech sector. So when he said that, then that sent the U.S. economy Friday into a headwind. And if you all know what headwind tailwinds are, when we talk about that, headwind is when it's like an airplane, like when it's going down, that's the head of the plane is going down, it's a headwind, and when the tail of the plane is going up, it's a tailwind, right? So the tailwind is if they start talking about tailwinds, they talk about it rising. They talk about headwinds, they're talking about it falling, right? So that sent the sectors into headwind Friday. Dow ended up losing like 1,000 some points, and NASDAQ like 400 some points. I forgot what the number was. Right. So that was enough conversation from him. After he said that, he didn't really need to say much else. I mean, people got what they needed and they sold off. Now, last week we talked about, I think it was last week, we talked about, what the economy is going to do, what the sectors are likely to do if the New York sector finishes lower on a Friday, for example, like it did last Friday. We said that come Monday, when the futures markets open, and those markets start to open on Monday, and those people who didn't get a chance to trade start trading, what was likely to happen. So we look at what happened today, and the markets are already down because those cycles from Friday, the market cycles and those asset cycles have to finish, because those people on Friday who were closed haven't gotten a chance to participate in the sell-off, haven't gotten a chance to participate in the market yet. So when they open up today, when the futures market and the FOREX market open up, those people got a chance to participate. So, it continued the downward cycle. Now I'm not sure where it is exactly at this exact moment, but when I looked at it at 6 o'clock, it was a gap down situation in the NASDAQ futures, and then I didn't check the FOREX, but it was a gap down situation. They pulled back a little bit. I'm pretty sure that they're going to continue to fall for the next few hours. That's my take on it. Anybody else?
I just wanted to make a comment about as soon as, what I was going to say is I'm actually in the process of buying a home. And over the past like 2 weeks, I have noticed the price of the homes come down in this area. I'm in Central Texas. And, of course, the prices are coming down. And, we were possibly a couple of weeks ago looking at 4.5 interest. Now it's 5.5 to 6% interest on houses at this point. But the price is coming down, which is still looking attractive. I mean, you need a place to live because the rent is doubled, like we all know. So I just wanted to make that comment.
Yes. Well, I appreciate it. Thank you. Yeah, the problem with people who having to buy, I'm not saying necessarily a problem, but the situation where people having to buy a home is you do have to have somewhere to live. And those interest rates, I mean, they're going to continue to go higher for the foreseeable future. They're probably going to start approaching, 7% here real soon in the near-term future, right? And so if you have to buy, I mean, you have to buy. I mean, the rents are not much better in some of these areas. They're going up, 30, 40, 50%, sometimes even 100% in some areas. So, I mean, if you can afford to do it, I mean, it may not be the ideal time, but you do have to have some place to stay. And it's kind of a quandary for everybody who have to buy a place right now, because you're buying at the top of the market. Interest rates are higher than they had been in, very, very long time. And they're not going to come down anytime soon. He stated that in his speech that there's going to be quite a bit of pain, economic pain, for a lot of people for a long time. But if you don't do it right now, it's going to be a lot more hurt coming later. So if you don't slow the inflation now, it's going to be worse. So that was the gist of his speech last Friday, and I think some of that information came out on Saturday. All right. So we talked about China last week, which is number 2 economy. They say it's the number 2 economy, and the things that's going on over there is really bad, and they're keeping a pretty good lid on it, except for what we can see that's getting leaked out. But their real estate market is in shambles. The banking system is in shambles. They're not manufacturing as much as they used to, if anything at all, because of the COVID lockdown restrictions and the supply chain issues that's going on, right? And then on top of that, China has invested in a lot of failing economies, like Sri Lanka, places like this. They did some of those things as strategic partnerships to position themselves against the United States, right? So when the United States, and Joe Biden, these types of people go over there and make these business to these countries, they go over there and they offer these countries very little in terms of economic assistance. And China goes over there and offers the world. So they end up partnering with China versus the United States. And that was a strategic decision, and maybe a political decision even, that I think is starting to hurt them right now, because these economies that they've invested in can't pay them back. And now that their economy is slowed down because of the COVID lockdown restrictions for the last few years, their manufacturing sector, the money that they had coming in to support their economy, has slowed down to a snail's pace. And the way that they build their houses and they support their real estate market in China is kind of like a Ponzi scheme. And the fact that they'll take money from one loan to finance the project of another loan. So the only way those types of Ponzi schemes and those types of structures work is if there's new money always coming in. And when that money slows down, then they have a serious problem. And that's what they're facing right now. And nobody's downgrading China's credit worthiness, because if they do that, then that's going to spook the market even further, and that's going to ripple across the world. Right? So
lock the down
all right. So that's kind of the situation that's going on over there. And it's not much better than the UK. They're having energy shortages over there. They're going into the winter, and Russia is cutting them off. So it's a terrible situation. We talked last week about it may be a good time to trade, but it may not be a good time to invest. And we're probably going to see a lot of pain in the morning when the New York session opens. We have to wait. We have to wait to see what London does. That's the next biggest market that's going to open after this Asian session, and we'll have to see what they do. But I believe that we're looking for another red day come Monday morning. Right. Anybody got anything they want to share? Anybody got any questions? Any problems that they
Tony, I have a question. This is Aaron out of Oakland. I wanted to ask, what is your perspective about how long this downturn is going to last? And I feel like you said that the Fed here kind of sets the trend and other economies follow suit, right?
That's correct.
But one of the things that we've talked about previously is that the UK and the Europeans haven't really significantly changed their economic policy, which is why their currency is like losing value, right? I just wanted to get your perspective on like how long this may last, or when do you expect, like, how do we find the bottom for things to change?
And
Like how long do you expect this this downturn and this high inflationary kind of environment, just based on previous kinds of like raising interest rates to address inflation? How long do these kind of things last?
well, the Great Depression lasted about 13 years, right? I mean, the true depression, you know, when they said it came back, it lasted a long time, so a decade, right? And I mean, you asking a very legitimate question, but you're asking a question that nobody really has the answer to. And the reason there's no answer to this question, I mean, there's models and there's, you know, there's past history that they can kind of go off of, but the reason that there's no answer to that question is because the world economy has never been in this state, right? There's you know, economic bubbles in all sectors, all over the world at the same time, right? So it's kind of a unknown territory for the world. And even without that being the case, you know, trying to pick a bottom, nobody knows. I mean, you can look at, okay, well, it did this, you know, 10 years ago. Well, 10 years ago was a different market. The only thing they can do is predict the probabilities. But nobody's ever seen anything like this. They pumped in $6 trillion 2 years. And they're still pumping in more money. They're trying to buy their way out of inflation. That's not how you do it. Right. So, I mean, I don't think we've seen the bottom yet. You know, I think that over the, you know, the next half of this year, going into winter, when things start to slow down naturally, historically, right? Anyway, you're going to see some pain there. You know, companies that haven't laid off in years are starting to lay off. Walmart laid off some people. And, you know, Amazon's, you know, in some pain, right? Netflix is going to a advertising model because they lost so many customers, right? So companies are changing their business structures to try to stave off some of this hurt. And nobody knows how much it's going to hurt because, you know, some of this stuff we just don't need. We don't need Netflix. We don't need Hulu. And, you know, nobody needs to go to Disney World. You know, those are things you just don't need. Right? So what are these companies going to do when their sources of revenue starts to dry up? Well, they're going to have more layoffs. They're probably going to stop dividends. They're probably going to, you know, the 401ks that people have are going to go through a lot of hurt. You know, I mean, they've already down, you know, 30, 40%. And, you know, some of them down 50%, you know, so you start off the year with 700K, you only got 350 now. Yeah, you're probably going to get it back, but it may be years before you see that money again, if you ever. So, especially those people close to retirement or living off pensions. So, and when that starts to happen, and people see that their savings are dwindling, if they, you know, people who haven't moved it already, the ones that left are going to start pulling their money out. And then, you know, it's going to be like chum in the waters. You know, it's going to be a shark feed for it. People are just going to start dumping. Now, they start to realize that the analysts and the people who were saying it was okay was telling them it was okay and it wasn't. So the bottom is yet to come, I think. I say within the next, you know, 12 months, 18 months, you're gonna see a lot more economic pain.
Got a question?
Yes, sir.
What you think caused a lot of this COVID-19 or the war over there in Russia?
it's a complicated question, but the war in it's kind of the war in Russia was when the Soviet Union broke up, right? And all that land is over there used to belong to Russia, right? Way back in the day, World War II time frame, all that land belonged to them, right? And they collapsed, they broke up, right? Those countries that are now, that used to be a part of Russia, are now part of NATO. And they're getting closer and closer to Moscow, right? So Russia is surrounded by enemies, or at least perceived enemies, right? So, and he can only, and in order for Putin to get his ships out to sea, he has to go through NATO territory, right? Because he's surrounded now. And Ukraine is one country that's one step closer to Moscow. You can launch an attack from Ukraine deep into Moscow. That's how close it is. Look at it on the map. And you'll see that those countries, those NATO allies, are surrounding Russia. So the man feels threatened. Who wouldn't feel threatened if you're surrounded by enemies? Right? You know, enemies can see what you're doing, and they got weapons at your border. Right? And then on top of that, right, Ukraine produces precious materials. I forgot what it was. I don't know. But they produce precious materials for the creation of semiconductors. I think it's semiconductors, if I'm not mistaken. I think it's like 80% of I think it's the gas. I forgot the name of the gas. It's some gas that they use. But they produce like 80% of it for the world. And I think it's to make semiconductors. Right. So I don't know if that has anything to do with it, per se. I'm sure it does. While they don't want Russia to control that much gas, that's a critical component of all of technology. Same thing with Taiwan. We talked about Taiwan last week. Taiwan has the Taiwan Semiconductor Manufacturing Company, the TSM. Right? They produce over half of the semiconductors in the world. It's a little bitty old country. Right? So, of course, the United States wants to maintain a relationship with China, or I'm sorry, Taiwan, for some of those reasons. They don't want China to control 50% of the semiconductors in the world. So they're going to try to maintain a relationship with Taiwan against China's wishes. And now they come out and say we're going to build our own semiconductors. They've been out of get something like, I don't know, $52 billion or something to build their own semiconductor plant in the United States. Well, they should have did that 20, 30 years ago. Right? But now they send all this stuff overseas. And now when stuff like this happens, you know, they got to fight to maintain relationships. Right? So it's a lot of complicated reasons, you know, why there's a war in Ukraine and why the United States is all involved. But I don't know if that's the scope of this whole session. Like we can get deep into that. So that's kind of my opinion on it. Check it.
Thank you.
I have a question.
Yes, sir.
When you say NATO is like surrounding Russia, and cause like at first like earlier you said China was offering companies like the world, and the United States was offering like bare minimum to all these like small countries around the world. Like my question is, what is NATO offering these countries that Russia can't? Like why are all these companies going into NATO all of a sudden, and Russia just kind of not, that they don't have no allies seem like it?
NATO protection against countries like Russia or Iran or whatever country that's trying to attack them. But NATO has an agreement that any NATO country that gets attacked, all the other NATO countries immediately come to their defense. Immediately, right? And that's why the Ukraine, who is not a NATO ally, by the way, wants to get into NATO. So if Russia were to attack, all the NATO countries come to their defense immediately. That's the agreement. And who's the biggest part of NATO, right? United States. United States is the military arm of the world. Always has been. Goes all the way back when they started talking about the Balfour agreements and in the First World Wars, right? So military has been a strong arm of the world, the police of the world, if you will, right? They offer this protection, and all the other countries that want the protection, the military might, the economic backing, whatever, the assistance, the military assistance wants to be a part of it, right? And Russia does have strong allies, right? They're part of BRICS. They got India over there. They got, they just made a strategic alliance with Iran. And they got China, right? China's in some economic hurt right now, but they still got a 2 million man army, right? And they're heavily militarized complex. United States got both, they got both. You got missiles, we got missiles, right? So, I mean, Russia and Russia, is not a slouch itself. They were saying that Russia is weak, and they showed its military weakness, trying to fight Ukraine and all this kind of stuff. And they posted some pictures of, they found off these 1960s, 19 World War II missiles, 1945 missiles, whatever it was. And they said, Russia using these old missiles, they don't have anything, right? Russia just took, in my opinion, this is just my opinion, Russia just took the opportunity to unload some old missiles. Why am I keep these old missiles that I had around for 60, 70 years for when I can just drop these things? Maybe they go off, maybe they don't. But they take no space. Drop them bad boys. Get them out of here. Right? But they use that as propaganda to say Russia's military is weak because they're dropping old missiles. No. If I got an old car in my garage and I got a brand new BMW sitting outside, I may keep it for a while, but eventually I'm gonna get rid of it. I want to park my BMW in the garage. Get rid of this old July. Those missiles were bigger back then. They're not as effective. They don't have as much firepower. Yeah, get rid of it. But the propaganda will let you believe that Russia's down to their last. I don't believe that. Russia didn't start this fight to lose. And they said, well, Russia is weak because they still fighting Ukraine. No, Russia is not fighting Ukraine. Russia is fighting NATO by itself. So if anybody, in my opinion, looks weak, it's NATO. You provide billions of dollars in aid. You provide military assistance. You got drones. You provide missiles. You got military troops on the ground. And you still fighting this war. And Russia's fighting all these people by itself. So who looks weak here? Is it NATO or is it Russia? That's just my 2 pennies. But I think Russia is very strong. And China has already said, if you push my friend too far into a corner, we're gonna have something to say about that. They say we got a relationship that has no limits. And if Russia look like they're on the back foot, China's gonna step in. I already said it.
Tony,
Hey, how you doing?
good. How are you?
I'm fantastic, thank you.
Awesome. I've been looking at oil, and I wanted to see your thoughts as far as fundamentals with the UK oil. How can you gauge where it's going to go? Because I've been paying attention to OPEC, plus how they want to stabilize the oil, Saudi Arabia, and then but US wants to put a cap on Russian oil. and then Hungary wants to oppose the oil ban. So I'm just trying to figure out, like, how do I gauge it? Like, what news am I supposed to like focus on when it comes to the UK oil? Is it mainly like OPEC, or is it the European Union?
It's an interesting, very interesting question. All is another one of those complicated situations. Excuse me. When you start talking about oil, you really start talking about OPEC plus, OPEC plus Russia, right? And somebody's always talking about putting a ban on something. United States particularly, I'm going to put a ban on somebody's product. But the problem with that is the world needs Russian oil. It's really just that simple. The Saudi Arabians already stated that we can't maintain supply without Russian oil. We can't keep the output going worldwide without Russian oil. Right. So while they're screaming, we're going to put sanctions and we're going to ban Russian oil, as the UK goes into a winter and they only got 65-67% of their oil needs stockpiled, how are they going to put a ban on Russian oil? Right. So that's good propaganda. But when they tried that and they say, okay, in the United States said we're gonna ban all Russian oil, all Russian sales. UK said, hold on, player, hold on. We can't do that. So what they said is we won't buy as much oil. We won't spend as much for. But Russia like, no, you're gonna buy what I need you to buy, whatever, right? Because they don't really control the flow of oil from Russia. So you can't really dictate as a consumer what you're willing to buy, because I can just cut you off and I just find buyers elsewhere, which is what Russia has been doing. They've been making partnerships with countries that don't care about sanctions, US sanctions. What they gonna do, right? I'm gonna buy this cheap oil while it's cheap, right? So, I mean, if you were gonna follow the news on oil, you would have to follow the countries that needed the oil the most, like the countries that's coming out of Russia. I mean, the company that's coming out of the Russian pipelines, and you'll follow OPEC and you follow Russia, what they're doing in Russia with those pipelines and what they're doing with the flow of oil.
Thank you.
You're welcome, man. And keep your eye on those Saudis too. What happens over there has a great impact on what happens in OPEC, and that's why Biden was over there earlier part of the year trying to convince them not to do business with Russia. They're like, no, we not okay. They gonna get that oil and they gonna do what they want to do with that oil, basically. And they can't really control the flow because they need it. They can't really say what they did. Those sanctions right early part of the year, and they froze all of Russia's they froze all their bank accounts and their money and stuff like that. But unbeknownst to a lot of people, the UK released like $500 billion of those monies that they had frozen in Russia, right? But you hear a lot about that because they was talking about sanctions, locking Russia out. But they secretly, getting that Russian oil for themselves, and they started like, well, we put the sanctions on until they start hurting us, and when they start hurting those countries that put the sanctions on, then they start lifting those sanctions. But when those third world countries, when those other countries that's not a part of the G7 and all type of countries was crying, hey, we need that oil, they didn't listen to them. But as soon as the UK starts talking about, well, we don't have enough oil for the winter, we need that Russian oil. Now those sanctions don't mean as much. But as long as it was hurting somebody else, it was okay. Right. So what they saying on TV and in the news is different than what they're actually doing behind the scenes. That's why I say you got to go to those international news sources, because they'll tell you one thing over here, but then you go to the news sources, they'll tell you, hey, this is what's really happening.
Okay, so it's best to like when OPEC has their meeting, I think like next week, it's best to listen more to them than to listen to like CNBC about UK oil.
I mean,
Basically.
you have to take in all the news sources, right? You have to take in all news sources, but you know, the OPEC, you know, those are the guys, those are the people who pretty much tell you what they're about to do, what they have agreed to do, right? They make the decisions. Everybody just pick up on those decisions. Now, you know, CNBC, you know, I mean, you gotta take that with a grain of salt. I made money with CNBC. I lost money with CNBC. Listen to what they had to say. So you really just kind of got to take it all in and find the sources that you deem to be reliable, more reliable for what you're trying to do, and follow those sources. But I look at all of news. I don't discount anybody's news. I look at Bloomberg, I look at CNBC, I look at CNN, I look at the Wall Street Journal. You know, I look at a lot of different sources. I look at Gravitas internationally. I look at the BBC. I look at a lot of different sources. You know, I'm afraid to look at Al Jazeera. I think they'll tag me or something. But I look at international and national news sources.
Thank you.
You're way more quiet. All right. Anybody else? Any paths you want me to go down that I can possibly assist with? All right. It's like the woman got quiet there. So if there's nothing else, I hope I added some value to you guys and guys and gals. You know, like I said, I don't really have anything prepared. I was just doing a quick Q&A so you all wouldn't miss your training session today with, Jessica being out and everything. So I'm gonna check the chat room real quick, see if there are any questions in there. I haven't been checking. But I don't like anybody's posted anything. So if there's nothing else, I'm gonna let you guys get your evening back. I appreciate that.
Excuse me.
Yes, sir.
Hey, I was wondering, are there any podcasts that you would recommend?
No, man, I don't really I can't tell you that one podcast. I don't really follow podcasts. You know, I look at a lot of YouTube's videos, pre-market, post-market videos, analysis. I look at a lot of news sources, but I don't really follow podcasts.
All right, thank you.
Do you have a podcast, my man?
Oh, no, I don't have a podcast. You think I should start one?
Yes, sir. Indeed.
Oh, I appreciate that. Thank you. I consider it. I consider it. I was just really trying to provide some value to you all, in Jessica's absence. I know that she really wants to be here, but circumstances just prevented it. So I didn't want you guys to come up short, especially going into this week where, I think some things are happening. So, when you're looking at, and I know somebody, I think AJ just had his hand up. So, when you guys looking at your economic, your calendar, right? Look out and put stars by, or even put on your Google calendar so you don't even forget some type of alert somewhere where you don't miss the high impact news days. They're going to be in red. It's going to have 3 stars or 3 bulls by it and things like this. And those medium news days, you don't really need to focus on the low impact news days. That's way too much news. But focus on the high impact, medium impact news days. Focus on earnings seasons, right? Those are high impact. Focus on interest rate decisions. Focus on the job numbers. Focus on the oil. Focus on the time of day that these news cycles hit, right? So if you trade in oil, I think oil, and I don't really follow oil that well, but I think oil comes out on Thursday at 10 o'clock. I think the oil news come out Thursday, 10 o'clock. So it's either Wednesday or Thursday. I think it's Thursday. So you got to find out when these news cycles are and when these high impact news events hit. So you know that you can plan your week accordingly. And like, Mondays are typical institutional trap days. Wednesdays are usually indecision days. Fridays is take your profit days. They also take positions on Monday, right? So knowing these types of things, you can kind of plan like, okay, I'm going into this week. This is what happened on Friday in the market. This is what I'm expecting to see happen on Sunday night, Monday morning when it opens. And this is what's happening this week. And focus on those things that are impactful. Everything is not impactful. I mean, and then some of the news you're not even gonna know anything about, because it's just unscheduled news. It's surprise. President of the United States had a heart attack. That's surprise news, right? So that's not going to be on anybody's calendar, right? We don't know how that's going to affect the markets. So you got to be cautious of those types of things as well, right? AJ, you had your hand up. All right. I don't know if AJ's still there. All right. Anybody else before we let me see. Share the forex trades. Janisha. I don't do forex trades, Janisha. So no, I can't share any forex trades with you. I don't do anything like that. Disney or not everyday life. Okay, thanks for that. Simple everyday life. Appreciate it. Sharing from the Miller's trade talk with the hedge fund. Okay. All right.
Well, I mean, one more thing since you was about to end it. I apologize, everybody, if y'all was ready to go. But last week we had talked about Japan's government just defecting. Did you get opportunity to follow up on any of that and what was happening from that standpoint?
No, I haven't followed it at all. I didn't even think about it, to be honest with you. I mean, it affects the forex traders more than it would affect me, right? I mean, I understand it's supposed to be a safe haven and all that stuff, but one of the things that you have to look out for, like right now, they consider all these things are safe havens, right? They go to safe haven. At one point, they still consider Bitcoin a safe haven, Japanese yen is a safe haven. But if you look at what happened last week, everything was down, even the safe havens, right? And when you looking at your fundamental analysis, look at the market flow, how the money flows, right? They got the bond market, the debt market. That's where all the money gets created, and then you got to see where it flows. So if the money is coming out of safe havens, where's it going to? Build yourself a market analysis chart somewhere, maybe three or four things that you track. Maybe track Bitcoin, track the NASDAQ, track oil. Let me see this. I wish I had my chart, but it's like 4 things. I can get those for you. But it's like track the bond market to see how the money is flowing from bonds to equities to forex and things like this to cryptos. See how the money is flowing, and you got inside see how it's flowing to gold, right? Because when it comes out of these safe havens, right, it goes to these risky assets, the equities, and when it comes out of the risky asset, it goes to the safe havens. But the thing that we've been seeing here lately is that the safe havens have been down with the risky assets. Now, with the stock market crashing like it did Friday, you would think that gold would have been way up, but gold was down too. Gold is a safe haven, right? The precious metals were down. So why is that, right? You would think it'd be shooting through the roof, and the reason why I believe it is, and the reason I don't have any concrete evidence of it is, but I know they'll manipulate the price of gold and precious metals, but they're keeping the prices artificially low so they can buy up as much as they can. Because gold should have been well over. I mean, with the stock market being down 30, 40%, 50% in some cases, some of these assets, right? Gold should have been way up, but it's not. Still hovering around $1,720 something, $30 something, right? Gold should have been way up. Precious metal should have been higher. Shouldn't be falling with the equities. It's not how it works. It's not how it's typically work. So what's going on? So it's just one of those situations where, like I say, this is, unprecedented times where they think things are, we think things are normal and they're not. These not normal. These are not normal things that typically happen. Okay, here's a question in the chat room. How do you think President Biden's student loan forgiveness is going to affect inflation? We had a discussion about this in one of the chat rooms that I was in on Facebook, and different schools of thought on it. For some people, they believe that it's going to greatly affect inflation because there's going to be more money that's freed up that people have to spend on something else. That's my position, right? Some people's position is that it's only $10,000, $20,000. It's not going to affect, inflation that much. All right. I tend to disagree with that. I disagree with that because even though it may be $10,000 to the individual, it's still something. It's still what, 600, $700 billion or whatever they wrote off. They added to the U.S. economy. That goes to the debt. Somebody has to pay for that debt, right? So it's an accounting issue. If there's a debit, it has to be a credit. If there's a write-off, somebody has to pick it up. And I think what you're going to see in terms of that student loan forgiveness is, and you're already starting to see it actually, is that there's going to be a tax liability to those people who got those loans written off. Because somebody has to lose the money, but somebody has to take account of that money, right? And even some of the states have already started to say, well, there's going to be since you got a write-off, that's taxable income. So you owe us taxes on that money, right? So they're going to write off on one side, only to lock you in on the other side with the IRS, right? And that really hasn't played out on the federal level that I've seen yet, but it's already starting to play out on the state level. Because it's a simple accounting issue. It's a debit and a credit. Somebody has to account for the money, right? Let me see. Anybody else in the chat room? Anybody else has any questions? All right. If there's nothing else, and I guess we're coming back to the end of the hour anyway. I think that's what Jess like to hold it to. If you don't have any other questions or any other concerns, I guess I can give you guys your evening back. And I'm not sure what's going to happen next week, which I'll check in with Jess and see, how she wants to move, if she's feeling any better, things like this. And then we'll just go from there, unless you guys have anything else.
Thanks, Tony.
All right, appreciate your time, Tony. Thanks, man.
Thank
Appreciate it, Tony.
Thank you.
Thank you.
Thank you.
Thank you.
All right, you're welcome. You're welcome. Y'all have a good evening.
Thank you.
Thank you. Appreciate you.